In this Money Smart Basics video, we will show you, when facing a car loan crisis, it's time to take action. Learn how to navigate through the auto loan challenges and find solutions. Discover effective strategies to manage your car loans and protect your wealth. Please remember to like and subscribe for more videos. Stay to the end to receive a bonus tip. America is facing a crisis. It's not a war or a natural disaster. It's a crisis of debt, specifically auto loan debt. Millions of Americans are struggling to stay afloat under the weight of car payments. This isn't just a few isolated cases. It's a nationwide issue with far-reaching consequences. The numbers are staggering. Total outstanding auto loan debt has skyrocketed. More and more households are devoting a significant portion of their income just to keep their cars. This leaves less money for essentials like housing, food, and savings. It's a dangerous cycle that can trap people in a never-ending loop of debt. This crisis is not happening in a vacuum. It's fueled by a combination of factors, including stagnant wages, rising car prices, and predatory lending practices. We need to understand these factors to grasp the true scope of the problem and find real, lasting solutions. Ignoring the issue will only make it worse, putting the financial well-being of millions of Americans at risk. Why are so many Americans trapped in this cycle of auto loan debt? The answer is complex, but it boils down to a few key factors. First, we live in a society that often equates car ownership with freedom and success. From a young age, we're bombarded with advertising that links cars to happiness and a better life. Second, for many people, owning a car isn't a luxury, it's a necessity. Public transportation infrastructure is lacking in many parts of the country. This leaves people with few options other than to own a car to get to work, school, and other essential places. Third, the lending landscape has changed. Securing an auto loan has become increasingly easy, even for those with poor credit history. While this might seem like a good thing on the surface, it can lead to people taking on more debt than they can realistically handle. Finally, many Americans are living paycheck to paycheck. Unexpected expenses like a medical bill or car repair can throw their budgets into disarray. This often forces them to rely on credit cards or high-interest loans, further exacerbating their debt problems. To truly understand the auto loan crisis, we need to talk about depreciating assets. A depreciating asset is something that loses value over time. Cars are a prime example of this. The moment you drive a new car off the lot, it loses a significant portion of its value. This is in stark contrast to appreciating assets like real estate or investments, which have the potential to increase in value over time. When you pour money into a depreciating asset, you're essentially throwing money away. This is especially true when you consider the interest you pay on a car loan. Think of it this way: every dollar you pay in interest on your car loan is a dollar you could have invested in your future. That's money that could be growing and working for you, instead of being thrown away on a depreciating asset. Understanding this concept is crucial to making smart financial decisions. The impact of excessive auto loan debt on your financial health can be devastating. It creates a ripple effect that touches every aspect of your life. First and foremost, it puts a strain on your monthly budget. A large car payment can eat into your income, leaving you with less money for other essentials. This can lead to a cascade of negative consequences. You might find yourself struggling to pay other bills on time, leading to late fees and damage to your credit score. A poor credit score can make it harder to rent an apartment, secure a loan with favorable terms, or even get a job. Furthermore, being burdened by car debt can cause significant stress and anxiety. It can strain relationships, impact your work performance, and even affect your physical health. It's a heavy burden to carry, and it can feel like you're constantly fighting an uphill battle. If you're currently struggling with auto loan debt, don't despair. There are steps you can take to regain control of your finances and get back on track. The first step is to acknowledge the problem and commit to finding a solution. Ignoring the issue will only make it worse. Once you've committed to tackling your debt, it's time to create a budget. This will give you a clear picture of your income and expenses, allowing you to identify areas where you can cut back. Look for ways to reduce unnecessary spending. Even small changes can make a big difference over time. Next, contact your lender and explore your options. they might be willing to work with you to lower your monthly payments or interest rate. Don't be afraid to negotiate and advocate for yourself. Remember, lenders want to get their money back, so they may be open to finding a solution that works for both parties. Prevention is always better than cure. If you're in the market for a new car, there are crucial steps you can take to avoid falling into the auto loan debt trap. First and foremost, determine a realistic budget and stick to it. Don't let flashy features or sales pressure sway you into spending more than you can afford. Remember, the car you can comfortably afford is rarely the car a salesperson will try to steer you towards. Don't be afraid to walk away from a deal if it doesn't feel right. There's always another car, another dealership, and another opportunity to find the right fit for your budget. Consider buying a used car instead of a new one. Used cars depreciate at a much slower rate than new cars, meaning you'll lose less money to depreciation. Plus, you'll likely get a much better deal overall. Thoroughly research the car's history and get it inspected by a trusted mechanic before making a purchase. Paying off your auto loan faster can save you thousands of dollars in interest and get you out of debt sooner. Here are some strategies to accelerate your loan repayment. Make extra payments. Even small extra payments can make a significant difference over time. Consider making bi-weekly payments instead of monthly payments, which can help you pay off your loan faster. Round up your payments? Round up your monthly payment to the nearest $50 or $100. This simple trick can shave months or even years off your loan term. Make lump sum payments. If you receive a bonus, tax refund, or inheritance, consider using a portion of it to make a lump sum payment towards your loan principal. Refinance your loan. If interest rates have dropped since you took out your loan, refinancing could help you secure a lower interest rate, reducing your monthly payments and saving you money on interest. Negotiate a lower interest rate. Contact your lender and inquire about the possibility of negotiating a lower interest rate, especially if you have a good payment history and improved credit score. Countless individuals and families have successfully navigated the challenges of auto loan debt and emerged stronger on the other side. Their stories offer hope and inspiration for those currently facing similar struggles. Take, for instance, the single mother who diligently followed a strict budget, cut back on non-essential spending, and picked up a part-time job to pay off her car loan 2 years ahead of schedule. Or the young couple who chose to purchase a reliable used car instead of a brand new SUV, allowing them to save for a down payment on their first home. These stories highlight the power of determination, discipline, and smart financial planning. They demonstrate that no matter how overwhelming the debt may seem, there's always a path to recovery and a brighter financial future within reach. Escaping the auto loan crisis is just the first step towards building a secure financial future. It's about adopting a mindset of financial responsibility and making conscious choices that prioritize long-term financial well-being. This involves developing healthy financial habits, such as tracking your spending, saving regularly, and investing wisely. It also means seeking out financial education and guidance from trusted financial advisors. Remember, financial freedom is not about depriving yourself. It's about making informed decisions that align with your values and goals. It's about having the resources to live a comfortable life, pursue your passions, and weather unexpected financial storms. Navigating the complexities of auto loans and personal finance can be overwhelming. Fortunately, numerous resources and support systems are available to help you make informed decisions and regain control of your finances. Nonprofit credit counseling agencies offer free or low-cost financial counseling, debt management plans, and educational resources to help you manage your debt and improve your credit score. Online financial literacy resources like the National Financial Educators Council and mymoney.gov, provide valuable information on budgeting, debt management, and other personal finance topics. A qualified financial advisor can provide personalized guidance on debt management, investing, and other aspects of your financial life. Connecting with others who are facing similar financial challenges can offer invaluable support, encouragement, and practical advice. Don't hesitate to reach out to your lender to discuss your options and explore potential solutions, such as loan modification or refinancing. The auto loan crisis is a significant issue facing millions of Americans. However, with the right knowledge, tools, and mindset, you can break free from the cycle of debt and pave the way for a more secure financial future. Remember, it's never too late to take control of your finances. Start by educating yourself, seeking support, and taking small, consistent steps towards your goals. Your journey to financial freedom starts today. Make the commitment to yourself and your loved ones to prioritize your financial well-being and build a brighter future. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promise. You need to hear this tip if you're considering giving a car loan. Or, think twice before you sign that car loan agreement. Always draft a formal loan agreement, even if it's family or friends. Having clear terms in writing not only secures your investment, but also saves relationships and misunderstandings down the road.
Please don't forget, like and subscribe for more Money Smart Basics video. Disclaimer, the content provided on this channel is for educational and entertainment purposes only. The information presented is intended to be general in nature and should not be construed as professional financial advice.